Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Hi, folks. This is Susan and Mike from the Armstrong Advisory Group, and we have a brand new guide this month, Understanding Changes to RMD Rules. Mike, what are RMDs?
Yeah, starting with the basics here, if you have basically any sort of retirement account, the IRS has a rule that has changed a lot over the years that says you must start taking distributions out of that retirement account at a specific age. It varies depending on when you funded it, how old you are, but those are the basics, that at a certain point, the benefit of that tax deferral starts to be looked at and taxed, and the IRS wants you to start taking mandatory distributions from those accounts.
They want to get their money from you for sure. Okay, so how do you figure out when you need to take those distributions out?
That's the complex part, because this has changed a lot over the last decade. So a few years ago, the age used to be 70 and a half. A lot of people have that fixed in their mind. It was then changed to 72. Today, your required minimum distribution can be anywhere between age 73 and age 75 for your traditional retirement accounts. Remember, too, that there's some complexities when it comes to your 401k versus just an IRA. There can sometimes be distributions required from each of those types of accounts rather than aggregating them. So definitely want to talk to a tax expert or financial planner when looking at all this.
Folks, we have a lot of details about how you can figure out when you need to take your RMDs in our brand new guide, Understanding Changes to RMD Rules. You can request a copy online at armstrongadvisory.com or call 800-393-4001. That's armstrongadvisory.com or 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Winter is coming, and before you know it, the sun will set at 4 p.m. and the frosty chill will be back in the air. It's time to plan ahead. Get out of the cold and into the sun in one of the most fabulous vacation spots in the Caribbean, the U.S. Virgin Islands. Enjoy world-class cuisine, picturesque beaches, rich history, and spectacular weather all year round. Whether you're going for a romantic getaway or a fun family vacation, the U.S. Virgin Islands has everything you need to enjoy an incredible vacation. Travel from the Northeast could not be easier, and there's no money to exchange or passport required. America's Caribbean is St. Croix, St. Thomas, and St. John. Visit one or all three. Paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Visitusvi.com. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
As we kick off Thursday here on the Financial Exchange, the big story is what is happening in the bond market with the 10-year U.S. Treasury reaching 4.98% in intraday trading. It's currently back down to 4.94, but it's closing in on that 5% threshold here. And look, it's a psychological thing more than anything else. The 30-year Treasury has cleared that 5% threshold, is now at 5.031. But big story continues to be rising yields and their impact on both markets and the economy. It's Chuck, Mike, and Tucker. And, Mike, your thoughts on the 10-year Treasury getting awfully close to having a 5 handle in the first digit.
Yeah, I think I want to attack this from two different perspectives. The first is the easy question, which is, why does yields climbing hurt stocks? And so I'm going to tackle that one with kind of a comparison that I've been using here and there that I think is a little bit easier to understand. And then the second piece would be, why are rates surging? That's the more difficult one to answer, because even the foremost experts and the Federal Reserve and the Treasury Department don't really know why yields are surging right now. But let's take the discussion of, why do rising interest rates hurt? I'm going to go beyond stocks and just talk about assets in general. And I've been using the example that I think is a little bit more easy to understand, which is a rental apartment. So I'm an investor out there, and I've got $1 million in cash, and I'm trying to decide what to do with it.
Sure.
And I can go buy a duplex in Quincy for $1 million. And that
sounds nice.
That does sound nice, right? So I buy this duplex, and I'm going to go find some tenants. And it's a really nice, already fixed up place.
That sounds hard.
And I'm going to find tenants that are going to pay me annually $100,000. But I've got to pay property taxes on that building. I've got to pay fees to accept the payments because I'm allowing them to pay electronically. So I've got that. I've got some tax filing fees. And, as good a shape that the place is in, I still have to do some basic maintenance on the property. So when all's said and done, I end up paying out a good $30,000. I'm left with $70,000 a year in rental income, net rental income on this $1 million investment.
That's okay. That's fun.
Sounds pretty good, right? A few years ago, it sounded especially good, because my alternative at that point was, maybe I go put it in the stock market, or maybe I go buy a CD. And, on $1 million, I was getting a real steal back in 2019 because the bank was willing to offer me 1.5% on my CD. So I was, I was putting the money aside, and I was getting $15,000 in a CD, or the opportunity to make $70,000 in rental income. Today, we have a very, very different story. I can go pour my $1 million into this rental property, which maybe you can't find one for Quincy for $1 million. That's nice these days. I don't know. But the alternative to that is I can go to the United States government, and I can guarantee my money.
Do you get to talk to Janet Yellen?
I get to talk to her personally, and she will give me $50,000 a year on my $1 million. compared to
out of her pocket.
Out of, well, not really, but we'll call it her pocket. It's even more creditworthy than Janet Yellen personally. It's the United States Treasury Department is going to give me nearly $50,000 a year on my $1 million. I'm not going to deal with tenants. I'm not going to pay property taxes. I'm not going to have vacancies. I'm not going to have somebody kicking a hole through the wall. The cops getting called.
Do you have to do upkeep on the Capitol?
I don't. I have to do almost nothing, and even trading that treasury is pretty much free these days. And so this is, in my mind, almost the simplest way to understand the complex relationship between interest rates and assets of any sort, whether it's cars, homes, stocks. As that risk-free rate, the risk-free, maintenance-free cost of money goes up, everything else in comparison looks a little bit less attractive. So that's my explanation on the easy part of the question, which is why does it hurt stocks?
Well, and even that's only part of it.
True.
So
it's only a piece
of it this way. It's if buying a 10-year treasury you could get 1% a few years ago, you'd say, gee, I might roll the dice and put more money into the stock market because I may get a higher return. I may do worse, but I'm not getting much from this, so yeah, let's give it a shot. The hurdle in order to make that same thing, even for something that's still easy, just putting money into an index fund or something like that. Hey, if you can get a risk-free 5%, I say risk-free not because there's no risk with treasuries. It's just like it's how it's talked about. Treasuries are thought of as the risk-free asset in world markets. So if you can have the U.S. government say, "Yep, I'm going to give you 5% a year over the next 10 years." Well, what do you have to earn in the stock market to make that palatable?
Right.
You don't say, well, gee, if I can maybe get 7, it's okay. Well, no, what if you only get 3? Then you took all that risk, and you got crushed. So your hurdle has to be higher. You got to be saying, no, I want to be more convinced I'm going to get closer to 10% or 11, and maybe you're not right now. The other piece is when we talk about how stocks are actually valued. And again, this doesn't matter until it does, because in bubbles, valuations go out the window. But ultimately, when you're trying to figure out, hey, what's a company worth, it's, hey, what's the value of the future earnings? And using that, to figure that out, we use something called a discount rate, which pretty much is the value of the appropriately timed U.S. Treasury bond, where you say, I'm going to discount future earnings by this much annually because I know I can get this over that time. And that, again, filters into how much you're willing to pay for stocks potentially.
Right. So if you believe that Tesla is about to sell a whole bunch of Cybertrucks 4 years from now and it's going to dramatically increase their profit margin at that stage, then you look at that future profit that it's going to generate and you try and figure out what that's worth in today's dollars based on what you just described, the discount rate.
Now, what was the second question that you wanted to try to answer?
The second question I think is going to take us the next 3 segments, which is why are rates moving up now? Right? The Fed's been talking about higher rates for longer since, May of 2022. And long-term rates started moving but haven't really surged until 2023. So what's new? What is suddenly driving up these long-term rates?
All right. I've found 7 different things that I think are plausible and that are all playing into this. No,
Yeah,
really.
I know. I hear you. I'm glad you have a list.
Anyone who just says it's this or it's that, sorry, it's not that simple. Here are the 7 different things that I've found that are potentially playing into this. The first, because what kicked this off was really in mid-September when the Federal Reserve met and they put out their Summary of Economic Projections. Their SEP is what it's called. And that Summary of Economic Projections differed from previous ones in that it showed growth being much more robust and inflation, kind of still lingering a little bit as an issue. And the interpretation there from markets is, hey, if growth is going to be better, then markets can stomach higher rates. That's one piece of this. Another one there is the actual economic strength has been better. I talked about this yesterday. Mike, have you looked at the Atlanta Fed GDP now?
Not since a couple weeks ago.
Okay. Again, Atlanta Fed GDP now, it is a model that the Atlanta branch of the Federal Reserve puts out, and it takes a bunch of macroeconomic data, feeds it into a model, and says, based on what we've seen historically, here's what we think GDP is going to be for the upcoming quarter. And I don't view this as something where it's like, hey, this is what I use in my projections or anything, but I think directionally it's interesting to see how a projection evolves over the course of the quarter. And what we've seen is that initially this quarter, we talked about this in August, 2 months ago, we were like, oh, GDP now is showing, projections of 5.1%. Well, it's probably not going to be that because, we only have a little bit of data so far, and, it's probably going to end up being lower, but, it's an interesting data point to start. Well, here we are now. We've got almost all of the economic data now through September. There's a few pieces left, and then we'll be there. Atlanta Fed GDP now is running 5.4% for Q3. So directionally, it's actually gotten stronger since the beginning of the quarter. And to me, this just speaks to the fact that, again, I'm not saying this will last forever because the two inputs to GDP are population growth and productivity growth, and both of those have been kind of lackluster for the last 20 years in the U.S. But at least for this quarter, the growth has actually been better than anticipated. I'll list the 5 other items, and then why don't we take a break then and we'll discuss them in more detail. The other 5 things that I've come up with, seasonality in markets, I don't know if I believe it, but there is something there when you look historically. Quarterly rebalancing, we'll talk about that a little bit. Future sizes of the U.S. deficit. The international buying of U.S. treasuries or selling of U.S. treasuries, and recent large issuance of U.S. treasuries. Those are the 7 things that I came up with. So let's take a quick break. We'll discuss a couple more of them when we come back.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network. Spouses generally serve as the beneficiary to your IRA or life insurance policy, but naming your estate the beneficiary has quite a few benefits. Your goal is to protect your assets from probate and the nursing home, and by naming your estate as a beneficiary, you can avoid the probate process, lessen the chance of creating any income tax issues on your RMDs, and enjoy enhanced estate tax reduction. Call Cushing & Dolan right now at 866-848-5699 and ask for their brand new guide called Why Name Your Estate an IRA Beneficiary. Learn about these benefits and others and provide peace of mind for you and your family during your retirement years. Call 866-848-5699. Or you can request the guide online by visiting our website at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The vibe like no other is back. The United States Virgin Islands, one of the top-rated destinations in the Caribbean, is making it nearly impossible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That could be up to $1,000 savings for a family of 4. Act now, because travel must be completed by December 31st of this year. Go to visitusvi.com and use the code VIBE2023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter is coming to New England, so visit usvi.com and head to America's Caribbean paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code VIBE2023. Plan your dream vacation right now. That's visitusvi.com and use code VIBE2023. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Warner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Required minimum distributions are a critical part of your retirement planning. The laws regarding these distributions has changed with the passing of the Secure Act 3 years ago, which means if you don't withdraw the proper amount when you're supposed to, you could face a 50% tax penalty. Hi, this is Susan Powers from the Armstrong Advisory Group, and we don't want you to make that mistake. Let us help you learn about RMDs and how they work so that you can avoid these tax implications. Our firm has a brand new guide available right now called Understanding RMDs. In it, we'll walk you through the steps of calculating your RMDs so that you withdraw the right amount at the right time. Call us today at 800-393-4001 and get your copy of this new free guide, or request it right now from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
Playing into higher bond yields here. We covered the first two, which were updated Federal Reserve projections and actual higher economic growth in the most recent quarter. Let's talk a little bit about seasonality, just as a topic. And again, seasonality, I don't have strong thoughts on it, but it does exist, and so it's worth noting that the back part of the year, the fourth quarter, specifically starting right around kind of mid-October, is typically a stronger time for equities in a lot of cases. And so what you may be seeing are some investors saying, hey, I want to take advantage of that, and selling some fixed income, some bonds, and saying, I want to move that in there. Is that likely a key driver for this? No, but it may be a contributing factor. I have that on my list.
I would imagine statistically, too, if you have a particularly bad sell-off in September, which on average produces worse than average returns, then statistically speaking, the October can be even better in those cases.
This gets at my fourth item, which is rebalancing. What did stocks do in September? They sold off. So what do you see automated rebalances do on a quarterly basis? Gee, our stocks are down compared to where we want to be. We're now underweight equities. We're going to sell some bonds and buy some stocks as part of a systematic rebalancing plan.
Sell bonds, yields go up. Got it.
So that could be part of it as well. Other things that are being talked about now, future deficits. They're big. They're big. The projected future deficits, a lot of people talking about them in the U.S. Hey, there's going to be, bigger deficits in the future. Gee, this is kind of making us a little bit nervous. Maybe we're going to demand more in terms of yield in order to compensate us in case inflation becomes entrenched or in case there's too much oversupply in the future.
So I think I need a little bit more of an explanation on that, because we've talked about massive deficits for years, but the argument here would be that the deficits now will be so much bigger in the future that there could hypothetically be not enough buyers of U.S. Treasury debt, and therefore rates would have to go up to entice more buyers. Is that the theory that we're talking about here?
Not even, not enough buyers. Let's look at it from this perspective. If you look at, I guess you can phrase it as not enough buyers makes it sound like the U.S. is not going to be able to pay its bills, which is not the case.
Right.
Like that's a different thing. What I'm talking about more is, hey, when you have unemployment at 3.7%, you should not be running deficits that are 6, 7, 8, 9% of GDP. They should be closer to like 2 to 3% of GDP at that point. So the question becomes, okay, when you move into the future, if you have any problems at all, say a recession that no one ever projects into the long-term, outcomes.
Sure.
Gee, there's going to be more supply then. What are you going to have to offer as yields in order to entice investors to buy those, given the fact that you're going to need to issue a lot more stuff in the future? So it's not that we won't be able to issue the debt. It's what do you need to pay in order to issue the debt?
Okay.
That's how I would look at it.
Yeah.
Along these lines, you got some short-term international things that are happening. China right now, if you watch what's going on with the Chinese currency, the yuan.
Not great.
They're trying to defend it at all costs. Now, I'm going to pretend to be China at the moment. My currency is weakening against another currency, the U.S. dollar. So what do I do in order to handle this? Typically, and this is why countries try to hold foreign exchange reserves of other currencies, if I'm worried about my currency compared to the dollar, I'm going to sell dollars into the public market because that will weaken the dollar compared to my currency. Now, when I say sell dollars, what do I have to do? Well, most of my dollars, they're not just sitting around a bank account. The government of China does not have $1 trillion sitting at Bank of America.
Believe it or not.
They don't. They don't do that. I know that seems what they would do, but they don't. Instead, what they own are $1 trillion in U.S. Treasuries, which sounds like a lot of money, but it's really 3% of the outstanding U.S. debt, so it's not a ton. But China says, you know what? When some of our Treasury bonds mature, we're not going to let them renew, or we may do some outright sales, and not renew, but we're not going to roll them into new maturities, is what I meant to say. And so what you end up with is that you have more bonds that have to be absorbed by the rest of the market, and so maybe you have a little bit of marginal pressure from something like that.
That's backed up by the fact that the Treasury Department, according to data from the United States Department of Treasury that was released on Wednesday, there was about $21.2 billion worth of Chinese sales of both treasuries and equities recently. So, yeah, this isn't just coming from data from China. This is also coming from the United States, kind of confirming that right now China seems to be dumping some securities.
Emphasis on sort of, because it's somewhat opaque in that one of the things that China and other countries that don't really get along as well with the U.S. as they may like to, one of the things they've been doing is been buying and selling more treasuries through third-party intermediaries. Yeah. And oftentimes that shows up as Treasury purchases through Belgium, just as an example. So you kind of have to figure out, okay, how are it's if you ever go to a sporting event and they got the helmets that are hiding something, and it's like, oh, which one is? You might just have treasuries that were sold directly by China, but then bought through a Chinese entity, routed through Belgium. So it's kind of hard to tell. But it could be part of it. The last piece is that remember back in. What was it, late in May when the U.S. raised the debt ceiling?
I remember, yeah. Might have been June, but yeah.
Everyone was really calm and rational about it, so it was very routine. No hysterics or anything like that. It was just everyone was really calm because that's what people do.
Our roof was on fire. Our hair was on fire, Chuck.
Yes. In any case, now you have Janet Yellen at the Treasury saying, gee, I got to build back up the Treasury General account, the bank account, quote, for the U.S. Treasury, and I've got some regular issuance that I need to do. And so short-term, you've had some more issuance in Treasuries than you have in recent quarters. So you got some short-term supply that's been coming in as well. Which of these is it? It's probably some of all of them. So whenever, you read a story that it's, Treasuries are selling off because of this, maybe, but there's a lot of other things that go into it. It's a very big, very complex market, and so these are some of the 6 or 7 things that I think are playing into this. Mike, I'm curious if you have any items that I left out.
I don't. I'll just say that if, in fact, it's deficits that's playing a large role in this, then of all the ones that we listed, that's the one that would make me most concerned.
Let's take a quick break here, but when we come back, we're going to talk a little bit about what Purple Tie Powell's going to say during his speech this afternoon.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
Hi, guys.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. Winter is coming, and before you know it, the sun will set at 4 p.m. and the frosty chill will be back in the air. It's time to plan ahead, get out of the cold and into the sun in one of the most fabulous vacation spots in the Caribbean, the U.S. Virgin Islands. Enjoy world-class cuisine, picturesque beaches, rich history, and spectacular weather all year round. Whether you're going for a romantic getaway or a fun family vacation, the U.S. Virgin Islands has everything you need to enjoy an incredible vacation. Travel from the Northeast could not be easier, and there's no money to exchange or passport required. America's Caribbean is St. Croix, St. Thomas, and St. John. Visit one or all three. Paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Visitusvi.com.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. Today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to set up designated beneficiaries for qualified plan assets from both a Medicaid and estate tax planning perspective for a married couple?
Yeah, IRAs are difficult to deal with, but many options. The best option generally is if you're married, husband and wife, whatever, the spouses can be each other's beneficiary. And that's how you normally do it. However, if you happen to be over or at age 73, which is the required beginning date for minimum distributions to come out, and you're doing estate Medicaid planning, and you have an irrevocable trust, you can also have a testamentary trust built into your will. If you do that and you meet those two requirements, then you can name the estate the designated beneficiary of your IRA. And under the new Secure Act 2.0, it allows you to do this without causing adverse required minimum distributions, and it will allow you to protect the assets immediately from the nursing home for the surviving spouse and shelter it for estate tax purposes all at the same time.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary by calling 866-848-5699. That's 866-848-5699. Or you can request your copy right at their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Busy day on Wall Street today as investors continue to observe rising bond yields and also digest a fresh batch of third quarter earnings. Furthermore, traders will closely watch Fed Chairman Jerome Powell's speech before the Economic Club of New York at noon. regarding the state of the economy and the future path to interest rates. Right now, the Dow is off by nearly 0.5% or 142 points. S&P 500 is down 0.33% or 13 points, and the NASDAQ dipping by 18 points. Russell 2000 off by 0.33% as well. 10-year Treasury yield up by 4 basis points, inching closer to 5%, now at 4.94%. And crude oil off by over 0.2%, trading at $87.69 a barrel. Netflix shares are jumping by 15% after posting a surge of 8.76 million subscribers in the third quarter, driven by a crackdown on password sharing and its new ad-supported tier. Tesla shares down by 8% after missing earnings and revenue expectations for the previous quarter. Chuck and Mike will have much more on Netflix and Tesla in the coming segments. Meanwhile, American Airlines reported a third quarter loss this morning and cut its profit forecast for the year, citing higher fuel prices. While the company beat earnings expectations, it generated $13.48 billion in revenue, below estimates of $13.52 billion. American also said it expects a full-year adjusted operating margin of 7%, down from a previous forecast for as wide of a margin as 10%. However, that stock is actually up by 3%. AT&T shares are jumping by 7% after posting better than expected third quarter earnings and revenue. And Peloton shares down by 1.5% after Bank of America downgraded the stock to underperform, citing declining member engagement. I'm Tucker Silva, and that's Wall Street Watch.
Mike, looking at Jay Powell today, any projections on his tie collar?
I mean,
I say no tie.
Oh.
I don't know.
Not at the Investment Club of New York or wherever he's the Economic Club of New York.
Tucker, I'm pretty sure that Jay sleeps in a tie.
Yeah.
He did something recently with no tie. Cash Powell.
This whole conversation reminds me of
loosen that button up.
Of an episode from 30 Rock when Liz Lemon comments on Jack's tuxedo, and his reply is, "It's after 6, Lemon. What am I, a farmer?"
Nice.
So I'm going. I mean, the safe, obvious bet is definitely purple, but I'm going to go with an orange tie today.
Orange,
like a burnt sienna type color. Yeah.
Was he a Halloween fan?
Yeah. It's the time of year, baby.
Okay. Well, what's he going to talk about?
Tucker, what do you have? What do you have as a tie?
Oh, yeah, you go with the favorite in the clubhouse, purple.
You're going purple?
Yeah.
I'm going teal.
Easy bet.
Jay Powell wants to get a little green on the board.
All right.
Just a little, though.
So long as we're on Halloween talk, do you guys know what a teal pumpkin signifies at Halloween?
No, Mike. What does it signify?
Allergy thing, right?
Yes. Yeah. If you're going to give out, if your kid has allergies, or if you're going to give out allergy-friendly Halloween treats, you hang like a teal flag or carry around a teal pumpkin. The more you know.
Let's talk about Jay Powell's speech. Noon today in front of the Economic Club of New York. I don't know how you join that club, but it sounds lovely.
Exclusive.
I don't think we're going to hear anything different from Powell. We've heard the same speech pretty much all year. Hey, we're going to have to keep rates higher for longer. We're actively monitoring the data. If we have to adjust course, we will. There's the potential for, some kind of little slip where he lets something out that, maybe he shouldn't, which tends to happen with Jay at a lot of his press conferences. But they tend to be minor in nature. And what I have noticed the last few times that he's spoken, you haven't gotten much activity on the back of it. It's largely been a market that's starting to pay more attention to what the Fed is doing and what the data is, rather than what the Fed is saying. And I do like that because I think the Fed talks too much.
So I don't know if this speech contains a Q&A, but if it does, I'd imagine Jerome Powell is going to get a question about how he feels.
It is a Q&A.
Okay, so he will get questions then about his own thoughts on what other Federal Reserve presidents have stated, which is the climb in long-term yields may have done our job for us in terms of necessitating another rate hike. How do you expect he responds to that question? Right. I mean, that's question number one if I'm going to this meeting.
I'm putting on my Jay Powell hat, so this is me responding as Jay. We take into account a variety of different factors as we try to make our decisions. One of those factors is the overall tightness that we see in economic conditions, and long-term rates may play a part in that, but they are simply one of the many factors that we consider, and we'll be looking at all of these different items over the coming months to determine what the proper course of action is for our policy going forward.
Yeah, that's boring, isn't it? Okay.
That's what I think he would say.
But he has,
on that.
yeah, he has to answer that way.
He's not going to say it doesn't matter because we all know that it does, but he's also not going to say, yeah, it's done our job for us.
Mm-hmm.
So that's kind of where I think he lands on that. Anything else of note on Mr. Powell?
Honestly, no.
Okay. Then let's talk about the flicks on the net, or Netflix as it's more commonly known. Stock is up 16% today after adding 8.8 million subscribers compared to 5.5 million expected for the quarter. They also announced that they are going to immediately raise prices for their U.S. plans. Their basic plan, which is no longer available to new customers, is going from $9.99 to $11.99. It's a 20% bump. And their premium plan is going from $19.99 up to $22.99, so a 15% bump. So Netflix is pretty much saying, hey, all these writers who wanted all that money, it's going to cost you, subscribers. It's going to cost you.
Guys, where is the ceiling here? $23 a month for a single streaming platform?
It depends on the amount of content provided, quite honestly, because here's the thing. It's not like it's one channel, to be fair.
Sure.
You know, you don't get just, 3 shows a year of 26 episodes and that's all you get. But at a certain point, look, you're getting close to $300 a year now for that top plan. What am I getting for that, and how much, is this going to cause more churn there? They clearly haven't seen churn yet at concerning levels to them.
Right.
Because otherwise they wouldn't be hiking it. I mean, they just did this. What was it, in the spring, I think they hiked their prices?
Right. Look, it is absolutely true that Netflix is weathering the storm better than other media companies right now. It is absolutely true that they have more content than just about any other streaming provider out there. They've been able to take advantage of the writer's strike. They've been able to buy content from competitors at a relatively low price. I know the example of Suits has been thrown out there. I don't remember, did NBC own that maybe? And they bought the content there, and it's been a huge hit on Netflix. So they've been able to, weather the storm a little bit better here, but we're getting into territory here of massive bundles. So I'm looking right now at the Disney bundles, and for the Disney Basic, you're looking at $10 a month with ads. For Premium, you're looking at $20 a month. No, hold on. That's the Premium with Disney and Hulu. If you want like a Disney, ESPN Plus, and Hulu bundle, you're only paying $25 a month with no ads. We're getting into very expensive territory here.
It makes you wonder when some enterprising entrepreneur is going to come out and say, look, I think that I can get you a better deal by putting all of this together into
a package.
I want to call
call it a bundle.
No, I want to call it a bundle. That's the word. I want to bundle it.
And then you can put a box in each of your rooms to stream those streaming services.
Yeah.
Well, here's the thing.
And I'll lease it to you. For $17 a month.
Here's something that would be fascinating, actually. If I'm Comcast, because we know you don't actually need a box in every room now, right? Like you can just
right.
Comcast could turn itself into a streaming company like that. But here's what would actually be really interesting: if Comcast went to all these different companies and said, I don't know what the total cost is if you add them all up. I'm sure it's probably somewhere in the ballpark of $100 to $150 a month. Hey, you know what? Instead of you guys charging this, why don't you take a 20 to 30% discount, and we are going to put you on every one of our households in the country.
Yeah. By the way, the basic Disney Plus right now without ads is only $14 a month. So just to set that number home, $14 a month ad-free on Disney Plus, $23 a month on Netflix Premium. It's just a wild difference.
It depends on what kind of content you're into. I mean, if you don't like Marvel or Star Wars,
Yeah, then there's nothing there for you for Disney Plus.
there's nothing there for you unless
Yep.
you're like an adult fan of the new Disney animation movies.
Sure.
And a lot of those have flopped recently, so I'm guessing there aren't many of
Yep.
those. On the other hand, if you have kids or you're one of those fans, yeah, there's a lot there for you.
Yeah.
All these companies are still going to run into trouble later this year. Not later this year, but at some point you get through the excess content that, kind of is built up that people haven't watched, like Suits. And then it's, okay, why am I paying $25 to watch season 6 of Survivor?
Right.
It's a good season.
And I haven't heard anything on the Actors Guild side of things for a while.
No, well, they had a major kerfluffle a couple weeks ago, and it's been dead since then.
Yeah.
They had a disagreement on something, and the negotiations broke down, and I don't think they've been back together in like a week or two. So it makes you wonder, can you just build content through writing and call it a book?
How would I watch a book?
Well, you wouldn't. You would read it. But it makes me wonder if Netflix could come out with a line of books from their writers.
It's pretty wild stuff here.
I'm just trying to think outside the.
What do you do
outside
with
the
writers
box.
and no actors? Yeah.
Yeah, you write books.
AI.
You
AI
write books.
actors.
Let's take a quick break here, and when we come back, sticking with a little bit of media talk with Disney, giving a little bit more disclosure about what's going on with ESPN's financials right after this.
Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network.
Have you saved enough for retirement? This is Mike Armstrong from the Armstrong Advisory Group. The advisors at our firm have 150 years of combined experience in the financial services sector, and they all work together to help you develop a unique financial plan that offers investment management, financial planning, tax strategies, and retirement planning. It's our goal to help you position your assets and give you peace of mind. Having a solid retirement strategy and investment plan becomes more important as you age, so visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Just click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us develop a plan to help you secure your financial future. Again, that's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Spouses generally serve as the beneficiary to your IRA or life insurance policy, but naming your estate the beneficiary has quite a few benefits. Your goal is to protect your assets from probate and the nursing home, and by naming your estate as a beneficiary, you can avoid the probate process, lessen the chance of creating any income tax issues on your RMDs, and enjoy enhanced estate tax reduction. Call Cushing & Dolan right now at 866-848-5699 and ask for their brand new guide called Why Name Your Estate an IRA Beneficiary. Learn about these benefits and others and provide peace of mind for you and your family during your retirement years. Call 866-848-5699. Or you can request the guide online by visiting our website at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of consumer cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
The vibe like no other is back. The United States Virgin Islands, one of the top-rated destinations in the Caribbean, is making it nearly impossible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That could be up to $1,000 savings for a family of 4. Act now, because travel must be completed by December 31st of this year. Go to visitusvi.com and use the code VIBE2023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter is coming to New England, so visit usvi.com and head to America's Caribbean paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code VIBE2023. Plan your dream vacation right now. That's visitusvi.com and use code VIBE2023. Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
Mike, what have we seen from Disney's releases regarding ESPN's financials as they try to figure out what to do with what used to be the cash cow for their business?
That it doesn't look too good. So the ESPN overall brand, I guess, if you will, which includes ESPN branded TV networks, ESPN programming on ABC, and ESPN. The profits from that division fell 7.8% in the first 9 months of this year compared to last year. And the fact that they are now choosing to break this out in and of itself tells me something. Like, what is the goal of them breaking this out at this point to show that it's quite ugly in terms of this? Does it building up shareholder sentiment to sell off the asset? Is it I guess I'm just confused on that front. Why break this out now?
I think because they want to try to see if anyone's interested in getting it off their books.
Or taking it on their books, rather.
Yeah, they want to see if anyone's interested in getting it off, like, Disney's books.
Disney's books, yeah.
Yeah. Here's what's remarkable about this is you look at the licenses that ESPN has for content, the NFL, the NBA, the NHL, Major League Baseball, college football. You have the 5 biggest U.S. sporting event draws out there. All the valuations on those teams are going through the roof, largely because of media deals, because media companies keep paying more and more for the rights. How can you not make money on those? Like, what are you doing wrong? How do you lose money on, not lose money, but how do you generate less money on these than past years?
Yeah, I struggle to make sense of it, Chuck. Like ticket sale prices, right? We talked about this at length. Sale prices to get into these venues to go watch a professional sports team are up like 40% over the last few years. It's wild that they cannot find a way to integrate this and make money. I think there's a separate story here, which is they poured just tons of money into sports commentary, and we all know SportsCenter just isn't playing the way it used to.
It very well may be just that the rights, they're paying too much for them. Because, again, this is profits that's falling, but even revenue still was down 1.3%. But it's clear they're paying too much for the content, and it's driving up the valuations of the franchises in the sports leagues, but it's hurting them.
Yeah.
The vibe like no other is back. The United States Virgin Islands, one of the top-rated destinations in the Caribbean, is making it nearly impossible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That's up to $1,000 off for a family of 4. Act now because travel must be completed by December 31st of this year. So go to visitusvi.com and use the code VIBE2023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter's coming to New England, so visit usvi.com and head to America's Caribbean Paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code VIBE2023. Plan your dream vacation right now. That's visitusvi.com and use code VIBE2023.
Mike, I saw a piece from, it's on CNBC right now. I'm kind of pulling something new in here. It talks about how, according to a survey that was done by Greenhouse, nearly 20% of workers have changed their name on a resume because of concerns about discrimination either related to age or ethnicity.
Change their name?
What's that?
Change their name, you said?
Yes. Yes.
Age discrimination based on name. Interesting. A lot of Ethels out there going by.
You know, I'm guessing. Yeah, I mean, again, there's certain names that like you just don't see amongst many 25-year-olds. Like how many
Ethel's
25
one of them.
Gertrudes.
Oh yeah. Why are we only thinking of women names?
If you want guys' names, how about? I'm trying to think of.
Tucker, you got a good old man name for us?
Chester.
My grandfather's name was Carol. Not a lot of male
I know
Carols
a Carol.
out there.
I know a Carol Papa John, actually.
Wilfred.
Wilfred's there, yeah.
In any case.
Sorry.
I was actually going to make an interesting point. I would imagine that if you had like a longitudinal survey of who has done this historically, I'm guessing it's actually been way worse in the past. Especially if you talk about, first wave immigration back in the 1910s, 20s, and 30s. As someone whose family came from parts of Europe that weren't particularly liked in the United States at that time, I'm shocked that I still have a last name that ends in a vowel. There were an awful lot of Italians who changed their last name from, Romano to Roman and, trying to make it sound more American. There was a lot of that stuff that went on.
As far as you know, Chuck, your actual last name was Zodinsky. Right?
Listen, honestly, at
none of
this
us
point,
actually
nothing
know.
Would surprise me. No, nothing would surprise me. It is what it is. But so there's that. Let's take a quick break here, and when we come back, we got a whole lot more coming up on hour 2 of the Financial Exchange.
Hi, folks. It's Susan and Mike from the Armstrong Advisory Group, and we have a brand new guide out this month, Understanding Changes to RMD Rules. Mike, the rules for RMDs are different when it comes to inherited IRAs. How are they different from your own RMD?
Yeah, so, your own required minimum distribution generally starts in your 70s with a few very limited exceptions on your traditional retirement accounts. When you get into inherited, you have a lot of different paths with a lot of different rules. So I guess starting off first with the most basic is if you leave your IRA or your 401k to a spouse, it's pretty simple. They treat it as their own retirement account, or they have the option to, and the RMDs are based on their own age. Where the complexities start getting into is when you leave them to a non-spouse. Here, there is an entirely new set of rules that was just changed in the last few years. It applies both to traditional and Roth retirement accounts, and the rules are actually so new that the IRS has not yet issued permanent guidance on how this is all going to work. But the general theory here is that you're going to need to empty out that retirement account within 10 years with a few limited exceptions. Where the IRS is still issuing some new guidance is around how much you'll need to take out every year during that 10-year window, and so we'll see where that goes over the next few years.
There are certainly more complexities when it comes to an inherited IRA. You can get the details by requesting our guide, Understanding Changes to RMD Rules. You can do that at 800-393-4001 or request a copy online at armstrongadvisory.com, 800-393-4001 or armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's, it's possible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That could be up to $1,000 savings for a family of 4. Act now, because travel must be completed by December 31st of this year. Go to visitusvi.com and use the code VIBE2023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter is coming to New England, so visit usvi.com and head to America's Caribbean paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code VIBE2023. Plan your dream vacation right now. That's visitusvi.com and use code VIBE2023.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Spouses generally serve as the beneficiary to your IRA or life insurance policy, but naming your estate the beneficiary has quite a few benefits. Your goal is to protect your assets from probate and the nursing home. And by naming your estate as a beneficiary, you can avoid the probate process, lessen the chance of creating any income tax issues on your RMDs, and enjoy enhanced estate tax reduction. Call Cushing & Dolan right now at 866-848-5699 and ask for their brand new guide called Why Name Your Estate an IRA Beneficiary. Learn about these benefits and others and provide peace of mind for you and your family during your retirement years. Call 866-848-5699. Or you can request the guide online by visiting our website at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The federal government has changed the way we deal with required minimum distributions. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and these changes could have a major impact on your finances if you don't calculate your RMDs properly and take the withdrawals at the right time. You may choose to withdraw more than the minimum amount, but you should understand the potential impact if you do. It's also important to factor RMDs into all aspects of your financial strategy so that you have the ability to manage your taxable income now and in the future. Call us today at 800-393-4001 and get a copy of your new free guide called Understanding Changes to RMDs. That number again is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Little bit after 11 a.m. here, and markets are a little bit in the red today. Dow's off 102 points, about 0.33%. The S&P's down 11 points, 0.25%. And the NASDAQ is down 15 points, about 0.1%. 10-year U.S. Treasury continuing its recent sell-off, yields up to 4.94%. If it was 9.94, that would be
get under your desk and cry.
That'd be a whole different conversation that we're having. So up to 4.94%. Oil, West Texas Intermediate, down 60 cents a barrel to 87.72, and gold is down $6.60 an ounce to 19.61 and 70 cents. After the bell yesterday, Mike, Tesla reported earnings. The stock was down about 5% yesterday. It's down an additional 8.5% today. I had to just check that to make sure it was not dollars, but no, it's down $21 today, 8.76% now. And the big thing that we are seeing, in my opinion, and we've talked about this on the show, I think even in the last quarter or two, that, hey, one of the things that we'll watch very closely is Tesla's margins to see what's happening there as they're cutting these prices. And lo and behold, the thing that everyone used to point to and say, oh, Tesla's different, their margins, they've come down right into the mid-single digits, and they look just like any other car company now, which is not bad. Like, there's a
it's
good
bad for their stock price.
Yes, which is why it's down almost 10% today. But again, there's a difference. You have to remember when we're talking about this. There's a difference between, hey, is this bad for the stock price, and B, is this a bad company? It's not inherently a bad company or anything like that. It's just, when you are priced as something different from your competitors, you have to be different from your competitors. And now that there's more competition, Tesla, for the first time ever, is just under 50% of U.S. EVs delivered in the most recent quarter. When there's more competition and you start feeling pressure on pricing, it's not as fun as it used to be. There's a reason why I often say that the auto industry is one of the three industries I would absolutely never want to get into, the other two being airlines and fashion. And this is why it is a ruthless business, a cutthroat business, a business of single-digit margins in the best times and bankruptcies in the worst times. And Tesla is fighting a battle now to try to maintain the aura that they are something different in order to justify a $700 billion valuation instead of a $100 billion valuation.
So big picture here, they reported a 44% decline in the third quarter net income compared to last year. They saw steep cuts, really price cuts across their entire lineup of vehicles. Musk painted a pretty cautious tone about the year ahead for the reasons that we talked about, but also broader economic reasons, borrowing costs, and just the economy in general. And then my favorite statement of the day, quote, "We dug our own grave with Cybertruck." He was specifically there. They did, I think, deliver their first Cybertrucks at the end of November.
No, they have not.
Oh, sorry. They're planning
they will
to,
at the end of
November.
Hopefully.
Deliver their first Cybertrucks. But the complexity of building the vehicle, along with cost overruns and design challenges, made him make this statement. And, yeah, you're right. It's starting to look like most other car companies that are making EVs. Tesla still has a lot of advantages in this space. We've talked about how other EV makers have had a tougher time convincing customers that they're going to be having access to a robust charging infrastructure network. Tesla has that where others don't. But for right now, it's a lot more competition, and they're needing to cut prices to stay competitive. And that you just have to really, if you're betting on that next stage for Tesla, you need to think of some sort of other innovation that's going to come, in my mind, in charging infrastructure technology or in self-driving technology that's going to move this company beyond where it is currently.
Can we talk about the self-driving piece for a moment?
Oh, the one that they've been promising for, 15 years now?
Yes, but even just so on all their cars that aren't full self-driving, they have, the autopilot. Is it autopilot or what's it called?
I think it's autopilot. And, as someone who has driven this, it is. So I have a 2020, I think it's a 2022 or 2023 Honda Civic, which has, lane keep assist and, slow down all the way to stop and restart autopilot. It does not even come close to what is available on the most basic version of a Tesla in terms of keeping you in your lane, handling tight turns and things along those on the highway. So I've been impressed by it, but it doesn't know how to drive itself.
Well, here's the thing. So I mentioned to you last week that I finally decided I needed a new car because my old one was breaking down.
Yep.
And so I have this 2024 Subaru Outback now.
Mm.
It's got all those same things, the lane keep assist, the adaptive cruise control, and I tried it out the other day just to see, okay, how's it do? It's pretty darn impressive.
Yeah.
And I don't know how big the gap is on stuff like that between Tesla and there. Now the full self-driving piece, I'm sure they're working on it, but they've been saying, I pulled a quote earlier today. And Mike, I'm gonna read this to you just while I pull it up here. I'm gonna read this to you because.
Can I guess what year it was from?
Let me read you the quote first.
Okay.
Okay. Here we go. Releasing private beta in 2 to 4 weeks, public beta in 4 to 6 weeks after that, and then all U.S. Tesla owners in mid-December. Above schedule is contingent on not encountering major unexpected setbacks. We're doing a full rewrite on everything, so you'll see what it's like. It's amazing. Yeah, it's clearly going to work.
2015.
2020.
Oh, okay.
So Elon was saying, hey, we're going to have the full self-driving ironed out and ready to go December 2020.
Mm.
Yesterday they said, well, we're hoping that we can work on this rewrite and get it done as soon as possible, but we're not sure how long it's taking.
Yeah. Look, in a lot of ways, the wealthy Americans who wanted a high-end electric vehicle,
they have them.
They have them already. And so what you're left with is a consumer base that might still want an electric vehicle, but needs the baseline Model 3, which in most ways is more expensive and very comparable in features to the Hyundai Ioniq or many other electric vehicles out there.
It's going to be fascinating. The other piece that Tesla has that I think is working against them is the form factor of their vehicles. They're designed to be very aerodynamic. They're some of the most aerodynamic cars ever built.
Mm.
But you ever open up the trunk of a Model Y?
No.
Not the trunk, but like the hatchback?
No.
Because the back roof line scrapes down at such an angle It doesn't stay. Think about Toyota RAV4, a Honda CRV.
Sure.
The roof line is flat to the back and then down. Yep. Maybe it slopes a little bit, but it's flat. You do this in a Model Y, and a lot of your extra cargo space that you would have in an SUV gets eaten away because the roof line comes down so steeply. It's the same reason why the Toyota Prius has that weird, double back window where it's half the back window is on the roof line and then the rest of it's cut into the back of the car because of how steep the roof line is. It's just not a great form factor for cargo, unfortunately.
That's why Mike drives a 2015 Toyota Sienna and gets 17 miles to the gallon.
That's right. That's what I'm talking about. And so this is why I think there's also opportunity for other entrants into this space, whether it's at high price points like what Rivian's doing on their SUV or lower ones like what Hyundai's doing with their Ioniq 5. This is the place where I think you can play around and say, hey, you didn't find what you wanted with a Tesla. There are other options there. The other piece, as you mentioned, right now I think there still is some hesitancy in terms of, hey, am I ready for driving an electric vehicle? And that's going to take time to overcome. It's not something that companies aren't making progress on. I mentioned that right now, 25% of all cars being sold are either an EV, a hybrid, or a plug-in hybrid in the U.S. 1 in 4, so that's a lot.
Yep.
You go back to 2020, the start of that year, it was less than 8%. So there's been a massive upswing in the people that are buying EVs, hybrids, and plug-in hybrids. But the piece of that puzzle that's just EVs, again, that's going to be a piece that's going to take time to grow. That's still only 8% of overall sales there. So it's going to take some time. Let's take a quick break here. When we come back, we're going to be joined by Edward Lawrence from Fox Business right after this.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network. The vibe like no other is back. The United States Virgin Islands, one of the top-rated destinations in the Caribbean, is making it nearly impossible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That could be up to $1,000 savings for a family of 4. Act now, because travel must be completed by December 31st of this year. Go to visitusvi.com and use the code VIBE2023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter is coming to New England, so visit usvi.com and head to America's Caribbean paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code VIBE2023. Plan your dream vacation right now. That's visitusvi.com and use code VIBE2023. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Warner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. Today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to set up designated beneficiaries for qualified plan assets from both a Medicaid and estate tax planning perspective for a married couple?
Yeah, IRAs are difficult to deal with, but many options. The best option generally is if you're married, husband and wife, whatever, the spouses can be each other's beneficiary. And that's how you normally do it. However, If you happen to be over or at age 73, which is the required beginning date for minimum distributions to come out, and you're doing estate Medicaid planning, and you have an irrevocable trust, you can also have a testamentary trust built into your will. If you do that and you meet those two requirements, then you can name the estate the designated beneficiary of your IRA. And under the new Secure Act 2.0, it allows you to do this without causing adverse required minimum distributions, and it will allow you to protect the assets immediately from the nursing home for the surviving spouse and shelter it for estate tax purposes all at the same time.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary by calling 866-848-5699. That's 866-848-5699. Or you can request your copy right at their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
All of us at the Financial Exchange are excited about this year's DAV 5K at Fort Independence at Castle Island. The date is Saturday, November 11th, and there's still time for you to register. Our partnership with the Disabled American Veterans Department of Massachusetts is a cause that's near and dear to all of us. So visit dav5k.boston and register to join Team TFE today. That's DAV5K.Boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation.
Joining us now is Edward Lawrence from Fox Business for a look around at markets and the economy. Edward, thanks for joining us. Appreciate it.
Hello, Mike. Yeah, thanks for having me.
So, as everyone knows, since the beginning of September, the major story has been about the climb in the 10-year Treasury yield. We're now sitting at nearly 5%. I think everybody kind of has their own theory on what got us here, but in terms of the impact, can you talk to us about what this is meaning for the average investor and maybe even outside of the markets, what it means for just the average American when yields are climbing this quickly?
Right. Well, we puts pressure on stocks. As you know, yields go up. You see the treasuries go up, stocks go down, and the reverse is true. When treasuries go down, stocks go up. It also puts pressure for the earnings seasons coming up, because here you have, let's say, 5-year treasury at close to 5%, 10-year treasury at close to 5%, and then companies have to come in with their earnings a little bit higher to make that investor. The investor can go to the safety of bonds at 5% or close to 5%, rather than the more riskier stocks. So there's pressure on companies during earnings seasons to come in with those bigger numbers. But there's an indication with the yields going up like this, you still have that inversion. Something like 18 months in a row or even longer, the 2 and the 10-year have been inverted, which has in the past indicated a recession is coming. So these are all warning signs for the investor. Be careful of stock volatility. And maybe bonds might be something to look to diversify for your portfolio. But then in the future, look for a slowdown that it seems the numbers are saying eventually will come.
You mentioned earnings in particular. We're just kind of getting started here, although a lot of reports this week. Last week, we had a number of banks, and with a few exceptions, generally beat expectations. What are your own expectations for this quarter's earnings that we're seeing reported over this week and next?
And some of the big ones, obviously Microsoft, Google, Alphabet, Amazon, Meta, which is the Facebook parent, Apple, and NVIDIA, they're going to all report next month. They have been driving a lot of the investment that's going forward, specifically when you talk about AI. That was a few months ago. That was the word. Every earnings call mentioned AI. And when you did, you got a pop in your stock.
Yep.
There's going to be pressure now, since AI has been out there, to show that AI can translate into dollars for investors. And that is going to be pressure on those specific companies to be able to prove that, yes, you can mention AI, you can talk about, you can invest in it, but is there actionable things that mean that they can advance your bottom line? And that is something that these companies are going to have to prove. Plus, you've got pricing power that is going to be that is a problem. Now, the Federal Reserve, for example, in the Beige Book, which is what the Fed uses in part to come up with where they should put rates in the next meeting. This last Beige Book that just came out said increases in fuel costs, wages, and insurance contributed to growth in prices across all of the districts. And the sales price increased at a slower rate than input prices as businesses struggled to pass along the cost pressures because consumers had grown more sensitive to prices. So if the consumer stops spending and making those choices, companies are going to have to figure out how to sell those products as their pressures for inflation, as their wages that they're paying workers are higher. They're going to have to figure out how to make that margin.
We've got a number of different political and geopolitical risks out there right now. We've got no speaker in the House. We've got the obvious terrorist attacks in Israel and ongoing war with Gaza. We have, to the positive side now, some movement on Venezuelan oil, bringing oil prices down. How do you measure all of these? To some degree, there's always geopolitical uncertainty and risk out there, but how does the average person navigate this with everything going on at the moment?
Yeah, if I knew how to navigate this, I'd be living on an island somewhere.
Yeah.
There is a lot of uncertainty. When you look at the geopolitical risk, you mentioned the Hamas attack on Israel. That specifically relates to oil prices. As you mentioned, Venezuela, there's going to be a lot of infrastructure building in Venezuela that has to happen because that infrastructure has really been dilapidated. So we won't see a boost from extra exports of oil from Venezuela. So the global supply will not increase probably until sometime next year from that specifically. So you're still going to have pressure on oil prices being high, especially since the transition the president is making to electric and discouraging investment here in the United States. So when you talk about the situation in Israel that's specifically related to oil and oil prices, energy prices, with that. Some of the other uncertainties, though, you talk about the Speaker of the House. At the moment, it seems the markets are not really concerned about what's going on in Congress. Now, we are going to come to a point where we need a budget passed with the federal government. The market hates uncertainty with that. But at the moment, it seems the markets are kind of brushing that off and looking at what the Federal Reserve is going to do. And this is the thing that investors need to pay attention to, because I think the market is missing the fact that the Federal Reserve is going to hold rates higher for longer than they think. I think the market believes there's going to be rate cuts next year. I have talked to a number of Fed district presidents who are voting this year and will vote next year, and all of them are saying they could see rates where they are a year from now. So I think the market is kind of discounting that, and at some point there will be a reckoning where there'll be a correction based on the market realizing that rates are going to be higher and money's going to be more expensive.
It's Edward Lawrence from Fox Business joining us today to talk about the markets, economy, and geopolitics in today's world. Edward, thanks for joining us. Appreciate it, and look forward to talking to you again soon.
Yeah, thank you, Mike. I appreciate it.
A little bit of breaking news on one of the items we were discussing. Jim Jordan has just backed a plan to empower interim House Speaker Patrick McHenry until January. So potentially some movement, not so much on a Speaker of the House, but on some leadership in the House. We will obviously keep that covered as well.
As I say with anything congressionally related, until the voting is done and it's signed, sealed, delivered, it's not real.
Agreed.
That's my view. It's always been my view.
Yeah.
Whether this Congress or previous, doesn't matter. Until it's done, it's not real.
Yeah.
Because I've had
the rug
Lucy
pulled
pull the
out.
football too many times on me.
Okay. Yeah.
And as a kicker, let me tell you, that hurts your leg. It does.
Chuck was a kicker in college, if anybody was unaware. Little Chuck trivia.
Yeah, we
there
talked
for
about
you.
it yesterday.
Did you? Oh,
Yep.
okay.
We did, yeah. Back-to-back days.
I missed out. Sorry.
Usually we don't do that.
Talk about Chuck's personal life on back-to-back days? No, we do not.
So let's see. I don't want to get into this story on household net worth quite yet. Well, actually, you know what? Here's what we'll do. Why don't we take a quick break, and then we got all this new data that dropped yesterday from the Federal Reserve. They do a survey of households every 3 years, and we got the latest data from 2022 yesterday about how much money everyone in the U.S. has. So we're going to talk about that when we come back. We'll also do trivia when we return.
The Financial Exchange is live on Facebook, so make sure to like our page and watch the guys break down the latest on the markets every day beginning at 10 on the Financial Exchange Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Spouses generally serve as the beneficiary to your IRA or life insurance policy, but naming your estate the beneficiary has quite a few benefits. Your goal is to protect your assets from probate and the nursing home, and by naming your estate as a beneficiary, you can avoid the probate process, lessen the chance of creating any income tax issues on your RMDs, and enjoy enhanced estate tax reduction. Call Cushing & Dolan right now at 866-848-5699 and ask for their brand new guide called Why Name Your Estate an IRA Beneficiary. Learn about these benefits and others and provide peace of mind for you and your family during your retirement years. Call 866-848-5699. Or you can request the guide online by visiting our website at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The vibe like no other is back. The United States Virgin Islands, one of the top-rated destinations in the Caribbean, is making it nearly impossible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That could be up to $1,000 savings for a family of 4. Act now, because travel must be completed by December 31st of this year. Go to visitusvi.com and use the code VIBE2023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter is coming to New England, so visit usvi.com and head to America's Caribbean paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code VIBE2023. Plan your dream vacation right now. That's visitusvi.com and use code VIBE2023.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. Today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to deal with qualified retirement plan assets, and can they be transferred to these irrevocable Medicaid trusts?
Great question, Tucker. Qualified retirement plan assets are difficult to deal with in the estate planning world. They're that round peg that you try to put in the square hole. It just doesn't fit well. Why? They have both income tax components associated with them and estate tax components, right? They are includable in your estate. However, if you wanted to put your IRA into a trust, into this irrevocable trust, you cannot do that. And not only into an irrevocable, you can't put it into a revocable. Why? In order to do that, you would have to take the IRA and liquidate it, pull all the money out and put it into your name, subject it to income tax, and then put possibly 40% less into the irrevocable trust. So that's why it's difficult to protect IRAs in advance from the nursing home. However, you could name the designated beneficiary of the IRA, the irrevocable trust, as part of your overall estate planning process. So that can be helpful. But it is a tough part of the estate planning world.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary right now by calling 866-848-5699 or request a copy at legalexchangeshow.com. Once again, 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer or cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizer served late night, because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited, dine in only. Well, on this date in 1987, stock markets around the world crashed. Worldwide losses were estimated to be $1.7 trillion on the day that would become known as Black Monday. The Dow Jones fell 4.5% more than it had ever fallen in a single day in history. Trivia question today: what percent did the Dow Jones fall on Black Monday? Once again, what percent did the Dow Jones fall on Black Monday? Be the third person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on tomorrow's show. 617-362-1385. And the third correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mike, if I were to say to you, money, 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 what would your response be?
Money!
Thank you. So, yesterday we got the Federal Reserve's triennial survey of consumer finances. They do it every 3 years. Why, I don't know. It's kind of like a... Tucker, is the Ryder Cup every 3 years or every 2?
2 years, yeah.
I can't think of anything
Cup every
that
3?
goes on every 3 years.
Something's every 3.
The Olympics?
No, that's every 4. Maybe it's the Gold Cup in soccer. I don't know. Anyways, every 3 years. They put out all of this household net worth data. They give you the broad stuff. They slice and dice by age and education levels, by percentiles. They do everything in here. It's a huge data dump that you have to kind of look through in order to figure out what's actually going on. And fortunately, a lot of people do this so that I don't have to do it manually. One of them is Nick Majuli, who runs a blog called Of Dollars and Data. And here's the breakdown of it in terms of what we saw. Because there's a Wall Street Journal article on the piece, but it's short and doesn't really get into it. So, if you are a household with the median net worth in the United States, in 2022, your net worth was $192,700. So that's value of your home, value of any investments, value of your bank accounts, minus any loans, liabilities, things along those lines. $192,700 is the median, meaning half the homes in the U.S. have more than that, half have less. Is that above or below where you anticipated, Mike?
Above.
It's a little above where I thought it would be, too, because in 2019, it was only $121,760.
Yeah,
that's a gain of 60% in a span of 3 years.
Yeah.
It's a big bump. If you are in the 25th percentile, so the top of that bottom quartile, net worth, $27,000. So you can see there's a very steep decline. It's not like it goes gradually down. A full quarter of households in the U.S. pretty much have $27,000 or less in terms of their net worth. That still is up from $12,410, so it's more than doubled. But it still is, again, I think it's good to have context of what we're seeing here. 75th percentile, $659,000. 90th percentile, $1.936 million. And the top 1%, and this is kind of a shocking one, quite honestly, to me. This is the one that really blew my mind. Top 1% has a net worth of $13,615,000. That means that 1% of households in the U.S., and there's about 150 million households, so there's like 1.5 million households that have a net worth of north of $13 million. Does that seem like a lot of people
And
that
how
have more
much?
than?
I wonder how big of an increase that one could be, because that must have been the single largest. Because when we talk about these increases, it was based on stock portfolios and real estate primarily.
In dollar terms, it is, but percentage terms, it's the smallest. Dollar terms, it was an increase of about $2.5 million.
Yep.
Percentage terms, it was an increase of about 23%.
Right, because stimulus payments didn't primarily go to the top 1%.
Now, here's the great thing. This also gives us breakdowns based on education and net worth. Do you want to go through some of these?
Please.
Do you want to start? Should we just do you want medians? I mean, I've got every percentile. Like, you tell me what you want to do.
Yeah, I'd like to start on education, and then do you have age demographic as well?
I have education broken down by age. So I have, like, the median net worth of no high school, under 35, 35 to 44, 45. I have all of it.
Oh, my God. We can't go too deep into the weeds here. Can you give me pure age?
No.
Okay. Then you choose. Dealer's choice.
I can't. Let's just do median. So if you have no high school degree, and, again, I don't have no age here just because it wasn't published here, but for no high school, if you're under 35, median net worth is only $7,000. From 65 to 74, it's $93,000. So you can see, even within here, there's a big skew. For high school graduates, under 35, median net worth is $23,000. It goes all the way up to age 75 plus, where it's $296,000. For some college, pretty much the same as high school, median for under 35 is $24,000. Median net worth for 75 plus is $243,000. College degree median net worth for under 35 is $94,000. For 75 plus is $981,000. So you can see there is a big skew there. Let's do the 99th percentile. So what do you need for the top 1% in each demo? If you have no high school degree, then if you are looking at 99th percentile net worth, you're pretty much right around $750,000 to $1 million. If you have a high school degree, 99th percentile at 35 years old, $820,000, all the way up to age 55 to 64, you got $11.4 million is the 99th percentile. So, again, further proof that, look, you don't need to go to college to make tens of millions of dollars.
You know, I think one of the big things that I look back at the last 3 years, Chuck, was, I mean, it was marked by substantial rise in asset prices, substantial rise in inflation, huge stimulus, but a lot of it was defined by disruptive change, right? I mean, how many people do you know over the last 3 years who changed their job, dramatically changed how they work, or changed where they live? Because for me personally, it's a big chunk, right? Like, even if you didn't change jobs, your job probably looks a lot different than it did just a few years ago. Household formation changed dramatically during the last few years. And to me, it leaves me with a whole bunch of questions, right? Like, if I start a new job, what sort of benefits do I have now? What do I need to do to make sure I'm still saving? What if I have an old employer plan left out there that I don't know what to do with? How do I assess all my new benefits? If I moved, what are the different tax implications of living where I do now compared to where I lived previously? How do I leverage this increase in net worth? Because maybe it's all in my home and my 401k, and yeah, I'm technically wealthier, but has it really changed my life? All of this leads me to one conclusion, which is you need a plan. You need to figure out how you're going to plan for the future in spite or in reaction to all of these massive disruptions and changes that have occurred in, honestly, most people's lives over the last few years. Very few whose jobs and lives look a lot similar to they were back in 2019. If you have questions like this, we'd love to talk to you here at the Armstrong Advisory Group. Our phone number is 800-393-4001. You can talk to a real live human being from the Armstrong Advisory Group, again, by calling 800-393-4001. Let us help you get on the right track and answer some of your financial questions. That number, once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, I want to talk a little bit about existing home sales.
Do it. What we got?
We just got the numbers for September, And in terms of the pace that we are seeing right now, it's slow. Came in at 3.96 million units on an annualized basis. So, again, not 3.96 million sold in the month, but that's just if you were to annualize that pace. Any guess, Mike, as to the last time that we saw such a slow pace of home sales?
1970-something?
No. Doesn't have to go back that far. You got to go back to 2010, though.
Wow.
Which, if you're familiar with 2010, not the best real estate market.
A lot more inventory.
A lot more inventory. Okay, prices were getting hammered, but it was not a particularly great real estate market. And so this is what we're seeing here is because prices are still high, and now as of yesterday, according to Mortgage News Daily, the 30-year fixed rate nationally hit 8%. Today it's at 8.03. That's the average they have. The homes that are out there are just unaffordable for anyone who needs to borrow money.
Yeah, we also, related to the housing market, we got the National Association of Home Builders Index that dropped, I think, 2 days ago. That was showing that the index dropped 4 points month over month down to 40 in October. Anything below 50 is considered negative. And so, from any number of different perspectives, people don't feel like it's a good time to buy a home, and nobody wants to sell one. So it's shocking that prices have stayed up for this long, but it can be explained, I suppose, and it leads to very interesting questions about what happens if more inventory does start coming onto this market.
The other piece that I think of on this is, let's say there is a recession next year, just hypothetically, and Federal Reserve says, hey, we're going to cut rates. Takes the short-term Fed funds rate down to 2.5, just as an example.
Sure.
10-year Treasury drops from 5% down to 3.25. Mortgage rate drops from 8% to 6%. How many people all of a sudden say, I'm going to try to sell my place right now while rates are low? And do you get a flood of inventory that comes out? And maybe that ends up driving prices down, actually, instead of up because of lower rates?
Yeah, you just don't know.
It's a wild thought experiment.
It's a wild mismatch right now because inventory levels are just so abnormally low. Yeah, my expectation would be any sort of shock that brings new inventory onto the market will bring prices lower regardless of mortgage rates.
Let's take a quick break here. When we come back, it's Stack Roulette.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. The vibe like no other is back. The United States Virgin Islands, one of the top-rated destinations in the Caribbean, is making it nearly impossible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That could be up to $1,000 savings for a family of 4. Act now, because travel must be completed by December 31st of this year. Go to visitusvi.com and use the code VIBE2023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter is coming to New England, so visit usvi.com and head to America's Caribbean paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code VIBE2023. Plan your dream vacation right now. That's visit usvi.com and use code VIBE2023.
Required minimum distributions are a critical part of your retirement planning. The laws regarding these distributions has changed with the passing of the Secure Act 3 years ago, which means if you don't withdraw the proper amount when you're supposed to, you could face a 50% tax penalty. Hi, this is Susan Powers from the Armstrong Advisory Group, and we don't want you to make that mistake. Let us help you learn about RMDs and how they work so that you can avoid these tax implications. Our firm has a brand new guide available right now called Understanding RMDs. In it, we'll walk you through the steps of calculating your RMDs so that you withdraw the right amount at the right time. Call us today at 800-393-4001 and get your copy of this new free guide, or request it right now from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Spouses generally serve as the beneficiary to your IRA or life insurance policy, but naming your estate the beneficiary has quite a few benefits. Your goal is to protect your assets from probate and the nursing home. And by naming your estate as a beneficiary, you can avoid the probate process, lessen the chance of creating any income tax issues on your RMDs, and enjoy enhanced estate tax reduction. Call Cushing & Dolan right now at 866-848-5699 and ask for their brand new guide called Why Name Your Estate an IRA Beneficiary. Learn about these benefits and others and provide peace of mind for you and your family during your retirement years. Call 866-848-5699. Or you can request the guide online by visiting our website at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Breaking business and financial news first throughout the day, only here on the Financial Exchange Radio Network.
Of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com. Trivia question today was, what percent did the Dow Jones fall on Black Monday? Well, that would be 22%, or 508 points. It took less than 2 years for the index to surpass its pre-crash high. When the pandemic hit in 2020, the Dow Jones dropped 13%. Or 2,997 points. Winner today was John from Hudson, Mass., taking home that Financial Exchange Show t-shirt, and he's also registered to win a $100 Applebee's gift card, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only.
Mike, what do you got for Stack Roulette?
Return to the office. Some companies are saying come in 3 days or just quit. I'll see. We'll see if that bluster actually turns into anything. I've heard that, I don't know, I feel like every fall for the last 2 falls and every autumn, if you will, for the last 2 autumns, and I've not seen any really meaningful increase in the badge swipes according to Castle Systems. We're still sitting at about half of pre-pandemic levels, so we'll see about that. But the other way to get around this is by coffee badging. Do you guys know what coffee badging is?
No, is that, do you put coffee on a badge?
No. What you do is you swipe your badge, go into the office, grab a cup of coffee,
and screw.
Chat with a few people.
Get out of there.
Take that cup of coffee, walk back out the door, and go home.
I like that.
But can't you see the entry and exit times? Because don't you have to badge out also?
Go out the window.
No. I mean, think about your own office, Chuck.
Think about it.
I'm thinking.
You don't. In many of these offices, in my experience, no. You badge in, and then it's just a motion detector to open up the gate again to let you leave, or you just walk out a door. that does not require a badge swipe to get back out. So, one, my warning to everybody on this would be your company has other ways to monitor whether or not you are in the office. If you've ever heard of an IP address, they can tell where you actually are. So, don't bet that this is actually working on convincing your employer that you're in there. If they suspect that you're never there, they'll be able to prove it in other ways than just looking at your daily badge swipe where you come in and get your cup of coffee and leave. But I don't know. I at least find that pretty humorous.
Yeah, I mean, I guess I'd be lying if I said that, like, on certain days, like, everyone wants to do this some days, right?
Sure.
Like, everyone has a day where it's like, I wish I could just show up and then leave. And look, a lot of people listening, you've probably done it at some point.
And,
maybe not in this way, but I'm sure every person working at some point, hey, Jimmy, can you cover for me for the afternoon? I can't do it right now. Okay, fine, no problem. Right? Like, even without, like, this kind of thing, everyone's done this. So I don't want to make this seem like, A, it's something new, or B, that it's something evil.
I'll tell you what, if I'm an employer, I'm a lot more frustrated and angry with an employee if they tell me that they're coming in and turns out they're just coffee badging, compared to an employer coming to me and telling me, look, I'm not coming into the office. I know that there's a mandate. Fire me if you want to, but I'm not coming back into the office. I can deal with that person. The person that's lying to me about it is gone.
100%. I mean, well,
right?
Again, I don't want to say is gone, because how many – I'll talk from personal experience. How many times are you just having a day, you got something – hey, you know what? Someone cover for me for the afternoon. I got to get out of here. I can't be here right now.
Yeah, that's not what that's not what we're talking about, though.
No, but even – look, why do you need that person in the office?
That's where this conversation should absolutely start. No doubt about it. But if you determine my team is coming into the office because this is a problem, and the person says they're coming into the office and turns out they're just swiping their badge and leaving after an hour.
And stealing coffee.
And drinking all of our darn coffee, then, yeah, that's going to be a tough conversation.
I guess out of all the things that you can do at a workplace, this is like one of the more harmless ones. If you're doing your job, who cares? Like, you're not stealing from the firm, you're not committing fraud, you're not doing anything illegal, you're not, being just, someone who your customers don't want to deal with. I'm not saying it's completely harmless, but in the list of behavior where it's like fireable versus okay, I don't know, this is more towards like the, hey, stop doing that, man, as opposed to we got to let you go immediately. In my opinion.
Okay.
Let's take a quick break for the next 20-some-odd hours, but we'll be back tomorrow. Tomorrow's Friday, right?
Sure is.
Yeah, we'll close out the week tomorrow and then head right into the weekend. We'll see you then.